All right, I am back. That video got cut a little short, which is fine. It was long enough. This is definitely going to be enough content such that we'll probably chop it up anyway. These are unadjusted, same positions that I ended the last video in. I did want to kind of, just continue this video because I want people to see what the trend sniper data is showing. Now we are overall pending bearish. There's no signal still on the 1 minute trend sniper, although it looks like it's kind of headed that direction, right? It hasn't started fully trending yet. And we're starting to see evidence of a transition in the 2 minute. So these are like my favorite conditions for entry. This one is just bearish. It says, hey, the last one was bearish. We're not really sure about this one. We're still in the bearish zone. Obviously, like even in relative to this little small time frame, we're kind of like coming from a period of up pressure. So, and you guys saw, in these particular positions that they were upside down a bit, right? Again, relatively small absolute value. And as mentioned, making the video and sharing the content is definitely the larger goal. So I mostly wanted to share that, right? I'm watching these configurations kind of like do what they do. And that is what is giving me, the information that I need to make a decision on what I want to do, right? Do I want to enter a trade? So I would still be in my Bitcoin trade. I would have ridden it all the way back to, negligible profit. And then, I don't know, if it all goes like the way it could go, ride it, back to 25, 30%. So let's maybe just have fun, and maybe we'll even open up another one. I'll just kind of, keep my eye on these, data points and what's possible, and try not to open up a short in too close of proximity to anything dangerous. But I think there's a lot of fun to be had here, and points to be proven. And so you saw me open an AVAX position that went against me. You've seen me now open Ethereum position that went against me. Next, I think I'll just kind of reopen just for fun a Bitcoin position again. So we'll kind of do something similar to what we did already. And I think like we're in a pretty good spot. So I'm just going to go ahead and do kind of the same thing. Now, I can kind of watch. I like this screen because I can kind of watch it, and then I can kind of decide, like, do I want to do this? And then I can just say, yeah, why not? Right? So there we go. I've opened up a 13x leverage Bitcoin position with $1,000 behind it. So as you can see, it's already, actually, I guess make that 12,000 or something, right? Something similar to the one we had, just recreating it. And we'll see if we could get lucky and nail it again, much like we did the first time. So recreating that position, since my stop accidentally took me out, I was just narrating and not doing a great job, paying extreme attention. But we'll see what happens. I do expect a bit of volatility because Bitcoin is Bitcoin. But I think that it looks like we could be, kind of like transitioning back to that moment of a bit of down pressure. And that'll be fun to watch. So we'll try to nail that again. I want to kind of re-emphasize the importance of trend sniper data for me in my world, right? This one hasn't changed yet. We have a nice hope it's in transition. This one is full red. This one is full red. And these are very sensitive time frames. This is the 30-second data. This is the 1 minute data, 2 minute data, and this is 3 minute data. So super, super sensitive stuff. I think you have to really have a good picture of what's going on in the macro for it to make sense, right? So if this position goes against me too much, I don't want to lose too much. I would just kind of go back and kind of redecide what I want to do. But I think that we have a good potential to go down. So I'm going to leave it open. As you guys know, when I make these videos, I'm okay being in the red. My bigger picture goal is to kind of prove the data. So right now, the 30-second is still in a bull trend, right? So it could continue to go up, but we'll see, which one takes over. And right now, it was just kind of a first attempt at an entry. based on, very, very small time frame trends, just to see if we could catch that transition. Like I said, I'm okay going upside down for a bit. These are just for the purposes of demonstration for you guys. So as you can see, people have not gotten overly confident in ETH. AVAX is kind of like just still doing what it's doing. And you've got the Bitcoin trade upside down right now. So that's not good. So we'll have to see what happens there and see if the larger time frame data, has what it takes to overcome everything. And we'll just go from there. But with that being said, I wanted to open it up to show the expansion, and I wanted to show the positions, and we'll kind of see, what they do. So I'm going to watch this. If I need to, like I said, I'll bail out of Bitcoin at a loss, but I'm not going to bail out, preemptively. I think that there's more to this, and I think we have some decent potential at that continued down pressure. I'm looking at trend sniper data in the 15-minute, the 24-minute, and I just think that even into the 45-minute, that we are probably like somewhere in the range of, that coming back down from that bullish volatility. So we'll watch this. Again, I'm going to time lapse it a bit. I just wanted to show you what the quad box, the 4x box of trend sniper data kind of looks like, so you can kind of decide. And right now the 2-minute is just only in the transition zone. It has not gone full bear. The 30-second is actually still flirting with transition zone, that it might not be sure if it wants to go bearish. The 1 minute is kind of also, it's in the bearish zone, so I feel good about that. But it's also kind of like flirting in that range. So anything's possible. Maybe I get to show you the close all button if I need to. But for now, I think it'll be interesting to see what happens. And just to be able to kind of like watch the data, watch the positions in real time, right? I think there's a lot to that. I think most crypto, trainers or, what have you, are not confident enough to do that. Nor do I think that, most of them want to watch their money fluctuate like that live in front of people. There's a lot of, I think we as humans, we have ego, and just to be wrong, even if temporarily, is just too painful for a lot of us. So we're going to watch this. You see the positions. I'm going to leave them open. If I, for some reason, decided to close them because they just became disproven, then I will close them. But otherwise, you get to see me upside down a bit on a couple different positions. I closed out the Bitcoin from earlier with a stop, kind of involuntary. It kind of, I protected it, but I didn't really mean to get out of it. I would still be in a great position. As you can see, I entered earlier up here at this line, so I'd still be in profit on that one. But entered this one again because I want to see what happens, and see if we have what it takes to go into some short pressure. And again, just to show people psychology of money and what you can expect to go through occasionally, if and when you're wrong, even if temporarily, and what it might look like to have to bail out if you're a little too wrong to where you just need to take that loss, again, temporary loss with an absolute value of money that's comfortable for you. And then to be able to just jump back in when, you are more statistically likely to be right? When your thesis doesn't get disproven by this degree of deviation. Right now, my thesis, if I were to have one, if I were to write it up, would not be disproven by much. I wouldn't even call this disproven. I just kind of entered a market order just to get the numbers moving for you guys because it's more fun, I'm sure. So anyway, we're going to time lapse this one, and I'll be working on editing the other, and we'll come back, learn, like I said, the original lesson, which is cut losses because your thesis is wrong, or hey, not all moments of down pressure are ultimately going to lead to loss. Sometimes you go through down pressure on your way to gains. But don't get overly optimistic or overly convicted when your thesis is being invalidated right before your eyes. Then it is time to literally hit the close all button and call it a day and walk away with whatever's in your balance, which is much more important than walking away with, liquidations or whatever it is that you stand to face as a consequence. So, all right, we will time lapse this and we'll continue. I just wanted to kind of finish this out because of the original thesis and a lot of the things that we were going over. So I hope you all find this valuable. So just a moment of unpause. Just want to show you, these are positions that were upside down, $70, AVAX upside down $3. But percentage-wise, they were pretty significant. We kind of kept them open just because we have a different belief, in the thesis of more of a at least for the short term, downward direction price action. So I'm just unpausing it for a moment while I'm editing the previous video so that people can see that, what was once a very bearish outlook with 2 out of 3 positions red and, just different things that might go through somebody's psychology are now, not so bad. This is somewhat of a potential, for transition to us being profitable, right? So I did not change the market order Bitcoin short that I placed earlier. That relatively in short order was negative, $40 or $50, something like that. So I haven't changed that. It's just kind of been hanging out here. If I go to show you just kind of what the data looks like on the trend snipers, which I'm a fan of. You can see bearish transition zone. You can see over here bearish, bearish, bearish. I like that. You can see potential for the bearish transition on the quadrant 3 chart. Looks like it's going into the bearish zone. And then we can look at potential for bearish transition in the bearish zone. Although those bottom 2 charts do not have macro trend signals that we're clearly trending, which could be an additional point of certainty that people might look for, right? If you have all 4 of these charts displaying 3 red boxes across the board, that's a very layman way of looking at it and saying, wow, I might just jump in on this trend, But I think there is more to it if you want there to be more to it. My only point on pausing here is just to show people that, what was once potentially a negative and in the red, it is now at a different moment in time. Hey, we're doing great, right? So you have to kind of choose how much do you allow your emotions to dictate your decisions versus how much do you let, just data dictate your decisions. You also have to ask yourself, how much do you allow certain absolute values to dictate your decisions. So as I mentioned, my demo trades are always going to be with, I think, palatable amounts that are, I think, just easily understood by most people, right? This is not anything crazy. A total of, I'll say a total of $2,150 is being utilized here to do whatever is going to happen. And we're just kind of having some fun, learning some lessons, and the lessons are more important than the money. So the cool thing, again, we're starting to see flips, which is nice. You can see now all of the confluence monitors are starting to move. So, this moment in time might be a point in time where somebody says, hey, I'm going to go look for, an entry. Or they may decide to enter when everything is red. You just have to be cautious not to enter at a time of overextension, because, I'll always kind of make the case that even if you're using smaller time frames, an entry here is generally better than a FOMO entry here. However, if you're looking at the 4 hour, you may have to kind of consider that anything in this 3 minute is going to be amazing, if you catch the right move on a larger time frame. So again, just wanting to show you guys a bit of how the data flips in live price action, right? So now we're kind of at the opposite end of the spectrum. Now we're at 4 out of 4 successful trades today, right? I opened one, stop loss hit. Otherwise, I'd have another Bitcoin trade in profit. But even the stop loss closed it out in profit. I kept AVAX and Ethereum open through the bearishness to kind of prove a point, a statistically probable point, right? As I've narrated throughout, I've always been ready to pull the plug. I'm not going to risk liquidation. Even of these amounts, I wouldn't risk liquidation. Doesn't make sense to do that. But with the data I had, with the knowledge and experience that I feel I have, I felt, that it was more prudent to keep them open than to close them, right? Because you get to decide if you want to cash out at a negative, I don't care what it is, right? Negative $100, or if you believe that you're on your way to, positive ROI, you get to say, hey, I don't want to cash out here. That seems like that wouldn't be a good idea if I have high conviction that we're going lower. So I'm going to go ahead and pause it again. I'll let some time lapse occur, but you can see, just your emotional state has everything to do with your decisions. And so a lot of this game is emotional. Let me see if I can get it in the camera. There it is, right? Emotional bench pressing to determine, just how much weight you can handle. And weight comes in the form of negative price action when your positions are upside down, right? So do you want to get to where you can bench press more? Or, do you need to keep it light and you just want to be toned, right? I just want to be toned. Or do you want to, compete for bodybuilding titles, right? And that's what I think higher leverage, precision, accurate, successful traders do, right? We compete for the title. So anyway, here's some positions, flipping that were once relatively, ugly. And you get to see the other side of it, which is why I wanted to extend this video, even though the other one stopped me before I was ready. So a lot of good content today. Okay, so I don't think this video will go much longer. I think I'm about done. These positions will, expand or not. I don't know. I think I've proven the points that I wanted to prove for this video, which have to do with, data, entry, setups, conditions conducive, evaluation of, different metrics. I really wanted to hone in for you guys on the trend sniper data, right? So we got to see the initial move, right? Because we saw the most sensitive part of it. So we kind of saw when there was kind of like I guess you could say enough logic to begin looking for an entry. And then now we can kind of see, trend sniper there, what it looks like to have like actual confluence across the board. And so now we get to see like what happens when trend sniper picks up. Sorry, I did not mean to do that. But now we get to see, what happens when trend sniper picks up actual confluence, across just those small time frames. Shouldn't matter much. But when you have significant capital in it, which I don't, I personally don't consider this extremely significant capital. I do, however, use it because I think that in the hands of a person who really puts the time and effort into learning this craft, I believe that there's a lot of value in being able to take, about $2,100, just a random number, and then being able to create, potentially a grand off of it, in a day. And if I were to keep this one open, it would just be to kind of show that potential. I do think that it is very possible that we see some nice downside. If we have a break, I think it will come 62,863. Let's do that, right? Let's mark it 62. I said 863, so let's just mark even lower, right? We'll just mark what we see here on the hour. So if we see the hourly break from its current low, right? And I don't mean it's low ever. I mean like it's current, like in the past 4 hours low. With the energy and trend sniper configurations that we currently have, that would be, somewhat the deviation that I'd personally be looking for, just for nothing more than evidence of, likely to be continued downside. Until then, I guess I'd want to just kind of share that any one of these positions could be protected as much as possible depending on a person's risk tolerance. But I do think that the more comfortable a person can be with just being upside down in moments of time, with or to the tune of dollar amounts in absolute value that are relatively comfortable, the better. Because for a person who wants so much certainty such that they can never experience down pressure and never be at all in the red in any given position, that person's not going to be a very good trader. They need way too much certainty. At its core, that's what it is. They need way too much certainty to be effective. So they will not be a very good swing trader, right? At best, they would really have to try to hone their craft in momentum trading for literally catching the breakouts from these really, really short-term moves and then protecting, the trade instantly such that they never experience loss, right? And if they do, they protect it to the tune of whatever their stop loss is. So I just, whatever happens, I mostly wanted to make that point. I think that about wraps up the video. I can just tell you that based on these larger time frame charts, it's possible that this retraces up, and it's possible that Bitcoin goes quite a bit further down. Let me see, even if I pull the weekly pressure lines, if we truly fall through, this area, and we have to look at even weekly pressure lines, yeah, the weekly does introduce a lot of closer ones, right? Like 62,000. So if 62,000 is a very conservative target, then it's really close. I personally think that with the configurations that we currently have, I would be more likely to look at the 2-week lines, which are surprisingly lower, because if I target something too close, then it wouldn't make sense. So I'd have to target something a bit further. I could front run it, by quite a bit, and even front running, the 2-week line. If we get a clean break of this line, I would be somewhere in the range of 56, So somewhere in that range would be my target. And if I were, to go and shoot for that target, even with just this minimal amount of capital, I actually could just take a look at what my number would be, right? Let's just say something like that. And so it would be 1378, and 1378 is actually 140%, right? So you can kind of just use your own math on a initial capital amount or an organic capital at risk that makes sense to you. Something you could live with both the upside as well as the downside. It's very important to be able to live with the worst case downside of your position, especially if it's likely to the tune of 50-50. So anyway, I think for the purpose of this trade, it's mostly over. I may show the outcome, but I'm probably just going to reasonably protect it. And I think for the lessons that I really wanted to share, I've gotten to share them. And I want to point out the sensitivity in the trend sniper data that shows us this move is coming, and we could easily see it, right? In fact, we saw it before. That's the 30-second, and it's already fully converted. So the 30-second really allows you to find these nice batches of up pressure. Now, whether you decide to abandon your shorts because of the 30-second time frame is really up to you. I have my head in front of it, but I can see that all three of these boxes are red on the 24-minute time frame. So I still feel good about that. I see that the dominating pressure is bearish. So I think that's valuable to look at. So there's a lot of data that can be gleaned. As you can see, we're potentially approaching transition zone here. So for those people that are just really sensitive, that data really helps. And I think I've kind of proven that point a bit much. So yeah, that's it. We got to go through a like pretty significant relative to the size of these trades down pressure. We got to see what it's like to have like, you know, almost all of them go well into the negative, come back to the positive, easily protectable, and then, you know, we take care of business and we do whatever's the right thing for us. So I think that about sums it up. This video ended up making me money, even if negligible, right? But I got to make a little bit of money in making this video, so it didn't even cost me anything, even though I was just literally being very, you know, just basically being very, what's the word? Careless with these positions. So I could be careless and talk and narrate and still have a good time. But yes, I think we've accomplished the goal of everything, and we just kind of show you the thought process, and then you protect them wherever you decide to protect them. When you're wrong, you're wrong. You know, I think per the DIIO method, very, very minimally, and when you are right, you're right without any cap on just how right you can be. So we'll see if I don't have more to offer on this. I'm working on editing the other one. I hope that it works out. It was a really, really good one. And then we'll kind of see what comes of this. But this one has proven its point, and I think that's great. So if I have anything else, it would just probably be the outcome if I hang around long enough to mess with it. But I appreciate you guys watching, and I hope this has served you all greatly. Just simply taking it to unpause in a moment of up pressure, where, you know, a short obviously feels scary. I have to, you know, fairly consistently look and just kind of make sure that my original thesis is not like being completely invalidated in any kind of way, and that I still feel that this is volatility. So that's kind of where I was at. Obviously, this is a pretty significant volatility. It could grow if it goes beyond absolute value threshold for the individual. It could always just, again, use the close all button and close everything out, take a loss. If you believe in your thesis, you believe we're headed down, you could obviously just hold on, and 30 minutes from now, you could be, you know, 10% in the green, right? So that's the game. Just a quick unpause while I wait for Loom to settle my ticket and fix my other video, which is the much more in-depth 2-hour version that led to these trades. Just kind of showing how to use the different orders, how to use stop losses, how to find entries, how to use the algos, all of that. So if you haven't watched that, it's a separate video, 2 hours, 7 minutes, organic. I think with Loom you can 2x the speed and watch it a lot more quickly. But holding through the red, because I'm not really concerned with the numbers until they start to either A, breach my absolute value pain threshold, where it just makes sense to cut your losses, B, invalidate my thesis, right? My thesis becomes invalid. It looks like Bitcoin is doing something that I could never have expected, and therefore it's not anywhere within my plans. Or C, if, what did I say, absolute value threshold, my thesis, and yeah, I guess that's about it. And otherwise, I plan on, you know, just kind of watching and seeing if we get this drop that I'm looking for. But I want people to, you know, to see the red side of things as well. And again, these are just arbitrary figures, but, you know, you have to acknowledge what it might be like to be in 13x leverage, negative 4%, or as high as negative 7%, right, in the red. You have to decide if that's right for you. Otherwise, use lower leverage, use a smaller capital position. I have another one, 3.6x leverage, right? Very negligible position because we're just doing these for example purposes. But you have to decide, like, is it within my pain tolerance to be at negative 2% in the red, right? Should be for everybody if you're going to trade. And then lastly, ETH, a good example of 3x leverage. This one was about a $3,300 position, 1,100 organic, and then 3,300 after accounting for the 3x leverage. How do I feel about being negative 2.67% upside down, the equivalent in this case of $30? right? So your ability to handle your absolute value of your trades is what will allow you to, you know, manage your emotions much more effectively and gracefully than if you're playing with numbers that are beyond your threshold of money velocity consciousness. I'm going to coin that term because it's just something I came up with, but I think it's true. You can only play the game with money velocity that your money in relationship with money consciousness allows you to operate with. Some people are way beyond me. Some people are, way below me. We all have our own place. It's not right or wrong. It's just where you're at. And I think that you have to play at that level. Otherwise, the numbers will freak you out and your emotions will have their way with you. And therefore, the market will have its way with you. And therefore, other traders will take your money. It's just rolls downhill. So just unpausing for a moment for some thoughts. Just wanted to share this, guys, so you can see it. And that is it. Just a time lapse. All right, so moments like this, we're coming dangerously close to thesis invalidation based on absolute values as percentages of the numbers we're playing with, right? Maybe not AVAX, right? It's not a big deal to lose $1.65 out of $49. With a ETH trade down here, it's probably not a huge deal to lose 4% of an $1,100 capital position. The one whose asymmetry is probably being threatened the most is the highest leverage one, right? Take that as a lesson. Coming in at almost negative 10% of $988. I'm going to take this moment in time to show what it looks like to go against the trend snipers, to go against the data, right? The overwhelming green, even on these tiny time frames. So there's a lot of information to be gleaned here, and I do want people to kind of see that these things catch the data really, really well. I could have exited these trades long time ago. However, I'm interested to see if the thesis holds true. Everybody gets to decide how much value they place on a thesis, but I think it's interesting that we're in standard deviation zone 3 here, right? So although in the moment the emotion is clearly overwhelmingly bullish, so if you're in shorts, the emotion becomes fear. However, I do find, like I said, I find it interesting that in this particular time frame, we are right there in standard deviation zone 3. And so I tend to do a couple things. One, I avoid exiting shorts in channels where I think they're relevant to the trade that I'm in. Also, I try to avoid exiting shorts in standard deviation zone 3. Instead, I try entering shorts in standard deviation zone 3. And I avoid entering longs in standard deviation zone 3, right? Because that's a FOMO move, right? If you're in standard deviation zone 3 of a downtrend, then you have to kind of wait for a bit more confirmation, and then you could say, okay, the thesis for downside is truly being invalidated. Let me go ahead and make a new decision based on all this new data. But until it's actually invalidated, it really wouldn't make a whole lot of sense to abandon your downside thesis in a moment of up pressure. Now, again, if your absolute value of your trades is being threatened to an uncomfortable degree, it really helps to know what that number is before you commit. It helps to know at what point am I wasting my money by holding on to it, because it's just going to continue to grow into the negative, right? So that's kind of what I think that user persona has to think about before they make these decisions, right? So we're going to kind of get a chance to watch what happens. I'm happy to share moments of down pressure with you guys, because like I said, most people will not, right? We as humans, we just like to share the successes, and we don't want to share the hardships, the challenges, the places in time that challenged our psychology. But it's not an accident that red or that pink line was there. I drew that way earlier, and it was, if you recall, it was a part of this video segment series. It was the breach of the volatility cloud in the 4-hour time frame. That is what caused me to call that a potential breakdown, right? I plotted it there. It's never left, and so that was kind of like where our original Bitcoin short, came from. And so now we kind of get to see, probably most specifically, if this channel gets respected. And I wasn't really sure, how, and I still am not, sure how these two resistances are going to be treated. But I think that's going to be the thing to watch for micro trades, right? How is this going to be treated? How is this going to be treated? Which one will breach? And if it breaches, this pink line sustainably, is that a moment in time where, regardless of the absolute value of trades, where it might make sense to exit some positions, right? We have to kind of evaluate what you really believe. I did take the time to build another chart that I thought was kind of interesting and useful, and it's based on larger term trends. Ooh, look at that. That's ugly, right, guys? Anybody watching this? It's ugly, right? And you can imagine if those were percentages of larger numbers, how ugly that could feel. That's a key word, I think, feel. But let's take a look at Trend Sniper data in some different time frames, right? Some larger time frames. Let's get perspective. So Trend Sniper data in the 12-minute says there's not really any signal, which might infer that we are consolidating. However, overall, bearish zone, bearish. Trend Sniper data, 24-minute to create perspective. Bearish zone, previous candle was bearish. So it's kind of saying this could change, but right now, yes, we're still in a bearish trend. And then we've got the 45-minute, which I think creates another batch of perspective. This one says we're still pending bearish. So this one infers that we are absolutely just in a moment of volatility, right? As we can see here with the confluence sniper, as we can see here with the strong bullish in the sensitive zone momentum, but we can still see we're in the bearish zone even in sensitive zone momentum. So these are like, just for, I would say, the well-initiated, these are signs that downside actually still is the prevailing energy, even if it's scary right now. And then lastly, we have, let me move my face. So lastly, we have, for Trend Sniper data, we have bearish zone. We are bullish, but we're in the bearish zone. And then pending bearish, still trending for the macro, for the 1 hour time frame. So again, these are just things that bring me comfort. I don't expect them to bring a person comfort who hasn't played with the algorithms a lot. But I think over time, these kinds of things and understanding the nuances behind this data would probably bring comfort, right? And so, yeah, I think that this kind of gives you an idea of what's going on. You can also look and see price action is still in the actually it's in the bull zone in the 45-minute time frame, but we're actually in the bear zone, right, as far as like the actual confluence itself, and we're still in the bearish zone here too. We're in the bearish zone here, and current confluence, even though the energy, which is more sensitive, is in the bullish zone, the confluence itself is still kind of hanging out in the bearish zone. Again, I'm kind of going collegiate on you guys for a bit. This is all in the confluence monitor training, which is over 2 hours long. I can look here at the 24-minute, and I can say, ooh, this is the only one so far that has so far made it into the bull zone, right? So this made it into the bull zone. It's strong bullish, and sensitive zone momentum, has us in the bullish zone. So no wonder we have a bit of overall sustainable, I say this in context to micro time frames, but what feels like sustainable bullish energy, what could feel like this down pressure is threatened to the extent that I need to get out of my positions, right? So that's kind of, something to consider. And I just wanted to show that we can use that confluence sniper data, and we can use the trend Sniper and the confluence sniper data in more time frames than just my tiny little, multi-minute time frames. But again, I wanted to bring you data in moments of challenge, not just pause it until the green comes and pretend like you don't have to have an overall, strong constitution when it comes to psychology of money. I don't know how much $100 in the red will scare the average person. I know there's a lot of people who will think nothing of it, and then there will inevitably be others that feel, like crypto is not for me because their first trade went upside down, a certain percent. So just kind of keep these things in mind. Wanted to take a moment to teach Confluence Sniper and Trend Sniper and to talk about the Confluence Monitor in a moment of, strong up pressure where thesis invalidation becomes a question that the trader has to ask themselves. And when we ask those questions, I think the truth is we have to ask them from a place of vulnerability and say, hey, like we know in this game we can be wrong. Has this shifted to where the amount of money in the negative is becoming uncomfortable and I should cut my losses? Or has it shifted where the data is now no longer supporting my original thought, right? We call it a thesis. So overall, if that doesn't change, then your execution and your decisions don't need to change. But the moment that does change, and you start seeing, deviations from what you thought would hold, that's when you literally come over here and you click this close all button and you say, whoa, the whole market is about to go long. I'm gonna be happy that all I lost was, $90 because I had a lot more to lose. I have I don't know, in this set, have $2,100 to lose. Yeah, that's not bad to lose $90 out of 2,100. And if you have a large account, then it's really negligible. So it just kind of depends on the game you're playing, how the absolute value numbers affect you. I'm working with these because I think everybody can understand these and have a good time with them, and we can kind of play the game in a way that I know I'm not gunning for perfect entries, which is why I entered the Bitcoin short when I did, because I want people to experience some downside in these tutorials. And I want people to watch me play the game in a way that maybe sometimes I hang on through downside. But if I end up needing to close, I will show that too. And you'll see me take a $150 loss or whatever it might be, right? And you'll see me take that loss. So I will continue this, and we'll just kind of finish out this exhibition. Loom is working on my other video to hopefully make it watchable, and if I can, I will share both of these today so everybody has a little bit of a glimpse of what's going on, what we're working with, what the strategies look like, what the psychology looks like, and what negative, bearish volatility looks like, right? We're upside down $91, and it's gone quite a bit higher. I think it had gone to 150. You can see where this candle has taken it to. So could we have gotten out much sooner? Yes. Could we have protected these trades? Yes. All of them were winners from the beginning. But I held on because I see the thesis and because I want the viewers of this content to experience downside. And then we see what happens. And if, like I said, if we need to cut our losses, we simply will. It's that simple. All right. We will continue and finish it out. All right, unpausing for a brief moment, give you guys a little glimpse of, so far, I think max pain, max thesis for abandonment, right? That's what the 5 minute looks like. Orange on orange forming, in a bunch of different time frames. About to possibly, I would say, let it go. I'm gonna kind of just watch small time frames real quick. But rather than lose too much more, if this doesn't work out, I will show you what it's like to just do what it takes to click the market order, right? So I'm just watching the 3 minute, but overall, it looks like we're in an uptrend in a lot of different places. And so I may hit this button. So what is this? $176, right? But you got to be kind of, a little cautious, just not getting too freaked out over small time frames. What I can tell you is we do not have respect of, we do not have respect of that line like we did for a while. And so at a certain point in time, relative to this balance that's in these trades of $2,100 or so, it might make sense percentage-wise to close out the trade if we don't see a reversal to down pressure relatively soon. I see that we are kind of like, extended pretty well with Bollinger Bands in these really, really small time frames. I'm not anywhere near liquidation, right? People should kind of understand where liquidation is, what liquidation is, and just the fact that I'm not anywhere near liquidation. But this is in excess of absolute value threshold that should be considered responsible for this trade, right? If we do the math, I'm going to do a little math while I watch this. We would say that 136 plus 45 plus 224 is $183, right? Obviously that's going to change a little bit. That divided by the total of about 2,100 is about 8%, right? So if we kind of stick to our thesis on what we want to achieve and what we don't want to let go, we kind of have to ask ourselves, is it time to let go? It's tough, it's honestly tough, because if you look at where we're at in the 3 minute there, we are in standard deviation zone 3. But with everything that I'm seeing, it's also very dangerous if this is an amount of money that is important to somebody, right? If it's not, I can promise you, I've seen people go upside down way more than a couple $100, and then ultimately nail the trade. If you have conviction and it's important, then you can absolutely do that. But as of right now, we're obviously upside down, a couple $100 on a trade. We're now trending in the 30-second, 1 minute, 3 minute, and into the 5 minutes. And we've got orange in the 15 minute. We've got yellow in the 24 minute. And in the 45 minute and the 2 hour, we're still just plain old green, which means, this could easily be volatility. And then, later, I don't know, maybe you're regretful that you sold out at a 8% loss when you could have sold out at a 4% loss, if you wanted to abandon the position in general, or that you sold out during this moment of up pressure and then Bitcoin really does go to, what did we say? Anywhere near this, right? You're 140% to goal. So these are the kinds of moments that I want to show in regard to more of a conviction-based trade, right? I think it's important to show conviction-based trades as well as safety-based trades, right? Where the safety-based trade is, once I'm in profit, I protect it, and I'm not going to let it go any further. So, like I said, right now, as I'm looking at these, I see kind of like a squeeze starting to happen, and so I'm really probably getting close to just letting it go. I'd like to see a retrace to this line right here, where I'm kind of like closer to letting it go at a break even. I think that's honestly probable. This is definitely the type of thing that will liquidate high leverage shorts. This is also the kind of thing that will catch a lot of people who are looking, at stop losses, kicking in to save them. So as we approach 200, the 6 hour is still cyan, the 4 hour is no longer blue, and so it's kind of like, I would say it's nearing that time that it's just a little too dangerous to let the trade expand and continue to take money, unnecessarily. Let's give the market, $200, and we call it a day, and we live to fight another day with no issues. But I do think, like I said, that we're gonna see a little bit of relief here, because it's just kind of gone on a bit to where I really think that we're about to just see a little bit of pressure release. and so I'm gonna wait just a minute and see if we get that. Even though we're in the midst of a kind of like what I see as a potential upward squeeze. Like I said, usually these are built to literally take from people, and to instill fear in market participants. And so I could sell out at that 200 mark, which percentage-wise, we did the math, would be kind of rough relative to a $2,100 into trades. And so yeah, if I can, I would look for a slightly more intelligent, slightly less emotional loss, even if I decide to go the route of loss. But like I said, the other thing to consider is just kind of where we're at. We are, even in this 3 minute, we are still in bullish zone, bullish, pending bullish. So we have to be kind of careful. And then in the 3 minute too, as I mentioned, it's just always a little. If you're in a low leverage position, it's kind of nice, but it's always just a little bit unfortunate if and when you decide to bail at standard deviation zone 3 and then it comes back, because oftentimes it does. But like I said, I don't want to just continue to lose unnecessarily, and I think this is very valuable to show people the psychology that even goes through my head as I'm playing with these position sizes in this particular time frame, with what's going on in this exact moment. The 45 minute is flashing yellow. These are just signs of bullishness that make me think that I probably will look to get out of it. But if I look to get out of it, I think I can get out of it in a moment of less upward price action. I think that we may come down. I will leave this to play because people can fast forward it and so forth. But like I said, if I can get out of it for a little less, I will. And then, like I said, I think if it gets to that point where I need to click the button and it costs me $200 in this case, then I just I go ahead and click that button. But this feels an awful lot like a moment of purposeful instillment of fear to cause people that are in positions like me, but with money that's much more important to them, to sell out of pure fear, right? So you have to really decide, how calm should you be? How calm should you not be? Should you sell? Because it's likely to just keep going up, right? And so here we are, 187, 190. So we're at about that 190 mark. And if I see it continue even on the 5, then I think, like right here, just kind of give you an idea. Kind of set my cap right there, right? Are we going to go above that? Are we not? If we do, you kind of set a somewhat arbitrary point of just like, there's a great chance it keeps going, and it's not really that bad to walk away with $200 loss, considering your gains and your wins and your victories are often even in the demo account, in the 1,000 plus range, 800 to 1,000 or more range. So that's kind of another little way to look at it, is you can just set an arbitrary, hey, it's either going to stop here or I'm going to let it go and just move on with my day. Because getting out of trades, again, especially if it's money that's important to you, allows you to free up your focus for either A, finding another setup, or B, enjoying your day instead of feeling like you need to be watching the monitors and watching the screens. So I think that there's a lot to say about that. So we are extended above where a lot of stop losses would be already, and I think for that reason, it would kind of be like the perfect point for the market to potentially turn and at least give a little relief, which is kind of what I'm looking for. It's kind of like, even if I start to see signs, like I said, this 45 minute showing signs of potential reversal to the upside. Even still, if that were the case, it just makes me beg the question, should I attempt to get out of this with less of a loss, right? Percentage-wise, because percentage is what I'm really concerned about, not really absolute value. I am, but like I said, these absolute value numbers are just really to kind of show people what's going on and to give people a sense of the emotion that one might go through. So see, I mean, I really was. I didn't want to do it. Nobody wants to do it. But I really was ready to click this close all button right here. And I would have lost $200, right? I would have lost $200. But we kind of knew how overextended we were, and we had the chance for this to be a place where the market makers would say, hey, you know what, we took everybody's stop losses money. Now let's go ahead and reverse it on them. And that's the game, you know, a lot of times. So again, I'm not going to give them more than $200, but you know, now it's kind of cool that you get to see this on video. You get to see the numbers flip, because now you can see the dump, right? I sometimes dislike these alarms when they come on when I'm making videos, but now you kind of get to see the moment in time that the market turns and it says, just kidding, even if temporarily. And then if I happen to still want to get out, and my gauge for that is, would I enter this same position again? That's my gauge, right? So let's look at a couple things as we're just deciding, right? Bearish, the 1 minute trend sniper is bearish, maybe in transition at best, but the 3 minute is bullish zone, pending bullish, right? So we're still relatively bullish. So that maybe was my moment, and this maybe is my moment to get out at 150 instead of 2, right? But I'm more concerned with narrating, so let's talk about that. Forgive me for the alarms. Okay, so the other thing I would just kind of quickly show you that I look at while I'm making decisions like this is this data here, right? Let me look at the data in the the micro time frames. Is there data here that says I should stay in my trade? Would this be an intelligent place to enter a trade, or do I think there's enough room, you know, for Bitcoin to just keep going up, and so it's more like me just giving away money to the market unnecessarily, right? Those are kind of like the questions I would probably have to ask myself. And now it becomes a little tough because you see a bit of exhaustion setting in, but the only time frame that even is close to maybe having a transition in its trend is the 30-second. So you get to decide if you want to let it play out. But I can say that if I'm just looking at this chart, we still see cyan in the 6-hour. We still see flashing cyan in the 12-hour. We do still see blue movement monitors in the 2-hour and the 4-hour. If we look over here, there's a blue movement monitor in the 1-hour, which makes for, a lot of times you'll see the body of the candle stopped in its tracks there, and all of that up pressure, which seemed so scary at the time and caused a lot of people to get out of it, was just pure volatility, right? That's still a blue movement monitor as well. And even in the 24, it's never gone green. The cloud has gone green, but the volatility, the volatility cloud has gone green. Hasn't really breached this sustainably. And overall, the movement monitor is still red, which is still loose bearish, right? So the numbers in your absolute value of your trades will instill fear, potentially, if you allow them to. So you really got to try to find a way to maintain, perspective and just figure out your relationship with money and how much can you afford to risk. How convicted are you to the downside thesis? And then just watch all of this. And like I said, the standard deviation zone 3 is always just such a painful place for the absolute value of the figures to get to you, to cause you to sell. Because to be honest, it's a very awesome place to short, most often. But I will be very transparent in saying this channel can start to shift upward, and you kind of like might have to go to a different channel and say, okay, well, which one is still being respected? Maybe this 24-minute is, et cetera, et cetera. This 24-minute has 19 minutes left before that red candle, or excuse me, that red volatility cloud is invalidated, right? So it could hold and then prove to be an excellent entry into a short. So again, regardless of what's happening with these trades, I'm doing these because I want people to feel the emotion. I want people to also understand the things that they have to think through, oftentimes in real time, on their toes. Cyan bar, blue bars, cyan bar on a 12-hour time frame, blue movement monitor, even in as large of a time frame or as little as a time frame as the 45-minute. And then they have to consider that if I really take the emotion out of it, I'm still operating in almost a full red volatility cloud environment, right? In each one of these places, I'm operating in a red volatility zone environment. So that's kind of a great, at least, argument for, should I sell this at 200, or is that the shakeout before the breakout for shorts, right? So now, as you can see, if I wanted out, if I had enough for the day, I would be at an $85 loss instead of a $200 loss. And I probably honestly still would have clicked this button if it went above the yellow, because I think at a certain point you have to draw the line at your loss threshold, and it doesn't matter what the numbers are. I mean, it does, obviously, but what really matters is it's deviating from logic. It's deviating from the logic of your thesis. And that's what's very important. So what's really interesting is we're coming back to the bearish side, and you have to, again, make further decisions on what to do. I don't always encounter, this type of volatility. A lot of times, fortunately, I'll successfully make a trade and I'll take my money. But I do occasionally encounter this volatility. And so I think in that regard, it's valuable for me to narrate the story, narrate the psychology, narrate the choices, narrate the decision-making process, so that people can kind of like decide who they are. And only through experience will you be able to decide who you are and what you're willing and able, to handle. And until then, I would say the best practice is to play with smaller capital sizes, lower leverage, until you start to get the hang of it and you establish your own belt level and your own win rate and your own degree of profitability, right? But look at what the market makers did. They literally took, so much from the market. They would have taken $200 from me, which more importantly was 8-9% of my position, of the money that I have tied up here, right? They were trying to take approximately 8% of it, and they could have. And this wick is why I was prepared to click my sell button at that yellow line, because I don't really know how high a wick sometimes can go. And sometimes, as a trader, I think you have to just decide whether it's worth it to you to continue to exacerbate your losses. But this is really cool that everybody got to see this, because we were at $200 upside down, and now we are at $55 upside down. And now what's really interesting is that was the toll to get through to the other side of the market, right? The happy side, the joyful side of the market. You had to go through that fear along with all the other people, many of which did click the sell button, many of which did have stop losses kick in, but you had to go through that as a price. In this particular instance, this particular scenario, for these three particular trades, in order to catch the happy side of the market, where if we take a look at the bigger picture of what's going on, could be really cool because we've got, you know, some nice blue on blue happening, right? With room for the original expansion we were looking for. We have blue, right? We could tell it's blue because it paints over here. We have cyan in the 12-hour. They're working here on the 1 hour, but we don't have blue yet. We have red. This little wick, or this good size wick, just kind of tells you that when price went up there, it caught a beat down and it got pushed back. But it did manage to take a lot of people's stop loss money. It did manage to cause a lot of people to sell in panic. And then here we have no breakout bar. And then in the 5-minute, we have our blue breakout bar. And then we're going to see if that wasn't an excellent short, as I had mentioned before, being in this zone over here, right, which is standard deviation zone 3, which is usually, if all conditions are conducive in all time frames, a really cool place to short for a nice result. So that is a summary of like a lot of what I was looking at, a lot of what I wanted to share. I think, again, because my mission with this video was educational in purpose, I probably captured even more than I could have hoped for, and so I'm gonna probably ride this into profit, is what it's honestly looking like. At a minimum, you know, even if it's small profit, I've got a trip to Austin that I'm going to go on, and I'm going to spend the weekend up there. But I think it's so cool that you guys got to see this. Percentage-wise, you got to kind of see, hey, this is what a person, if they had $2,100 in the market at that time, would have to deal with psychologically. And now you're kind of getting to see, again, this will be the last part of the video, you're kind of getting to see that potential break of the volatility cloud right there. It's been holding it up for a while. In fact, I was questioning, am I going to get a sustainable break of that pink line, or am I going to see the volatility cloud get breached, right? Which one am I going to see? And now I think it's become a little more likely that it's going to be this volatility cloud that gets breached, right? And now we have a new volatility cloud that formed right there at the pink line on the 24-minute. So now you have like a new resistance to take into consideration. So I think this video, you know, has served its purpose really well. I'd love to keep it going and kind of like, you know, move into it, but I think that more than likely I will at a minimum take these trades back into profit, and we will, you know, see good things happen, and I'll probably show that. But at the same time, I'm super glad people got to see that moment of volatility and some of the choices that you have to think through that will really only come to you after, you know, a certain amount of experience, because the initial reaction is panic and sell without thinking through things logically. But when you see the market do something similar over and over, and you have access to the data that says like what's real, you have to respect it until it's showing signs of deviation from acceptance. So we'll finish this up. I'll time lapse it, and then you know, like I said, we'll finish it up. I'll kind of just show evidence that I'm gonna push into profit, which I believe will be the case, and that'll wrap it up. I'm not gonna worry about showing you guys the gains and how good they are, or maybe I will, but just for the sake of time, you know, I would say you could always reflect back, right? It's 3:12 p.m. Central Standard Time. If you really wanted to see how far the expansion went, just by the time you're watching this video, check it out, and you'll get to see exactly how much it expanded into the green. If I can knock this out before I leave, you know, I'll share the final result with you, at least like just to prove expansion into profit, and then we'll worry about the rest later. But you saw what you kind of sometimes have to deal with to get to the other side of the road, right? The side of the road that is the successful side. And so it's not something everybody can do. I would say it is something everybody can do, but I think a lot of people have challenge with it. And so a lot of people in that regard cannot do it. All right, let's pause it and we'll see what happens.